Today is February 29th of Back Roads of Illinois edition. I am your host, Cesar Delgado. For today, this is your agricultural news on this morning. I visited Mark Gold from Top Third Ag in downtown Chicago. We talked about the commodity markets along with the feed report on Friday afternoon from the Department of Agriculture. The Brazil soybean production are very poor and demand is pretty lower than expected. It's been a while since we've been looking for the yields nearly all from Brazil. Don't forget to check it out for Commodity Classic in Houston for this week. Might be interested in the equipment from John Deere or Case IH. This is your agricultural or commodity markets analysis and update. We know about the commodity markets is lower than a couple years back in 2020. However, things were different from 2020 between 2018 because of trade war with China and the pandemic. Now large number of corn beans from Brazil. They are shipping to China from Brazil and Argentina. Now the markets are trading and downward to $3.99 in the corn market and cattle expansion in the middle because we don't know about the unit this spring or this summer. You can check the Farm Doc event in Culverton, Indiana for next Monday with farm broadcaster Todd Gleason from the University of Illinois Extension. Well, folks, there is your agricultural or commodity markets analysis and update. Thanks to listen from Back Roads of Illinois. I am Cesar Delgado. The risk of trading for the futures and options can be substantial. I'm Cesar Delgado from Back Roads of Illinois. I am joining with Mark Gold from Top Third Ag, part of StoneX's financial division in Chicago. Welcome to the show. How are you, Mark?
I'm doing fine. It's nice to be here with you, Caesar.
Let's start our conversation with the acreage report and the cattle on feed report from Friday. Otherwise, could you tell our audience about these things in the markets?
Well, the cattle on feed report came out on Friday, and it was a little bit more bearish. Placements were higher than expected. The on feed number was just a little bit higher, but overall, the cattle closed higher yesterday. Feeders were down about $1, but it was about $1.50 to $2 off their lows. So it really wasn't a bad reaction to the report. The acreage number we'll get at the end of the month in the end of March. Most people are looking for corn acres to be down significantly. Bean acres up a fair amount of what they're going to lose in corn. I would say that with the good weather we're having here in the Midwest and the very warm weather, that corn acres could be higher than what people are thinking. American farmer loves to plant corn, grow corn, and harvest corn, and they stick pretty much to their rotations. So I don't know if the change will be as significant as the early indications that we saw on the Ag Forum numbers.
I see the markets for every day with radio and TV. This market's and cash market in the corn complex, however, what does this mean for the farmers and buyers?
Well, for the farmers, we've got very low prices out here. The commodity funds have been very, very heavy sellers of contracts over the last several months. Coming into the week, funds were short about 350,000 contracts of corn. They were short about 70,000 wheat, short 150,000 beans, short 40,000 contracts of meal, and short about 50,000 contracts of oil. The corn number is the biggest problem there. It looks like the last couple of days, yesterday and today, we're seeing a little bit of a reversal in the markets. Funds look like they're starting to cover, but it's a little bit too early to say that the lows are in. In general, what we've seen many times in the markets is that they tend to make their lows on first notice day, which is Thursday. So the old saying around the Board of Trade is that you want to buy heavy deliveries on first notice day. So we'll see if that holds true again. But if the funds do want to cover some of these massive short positions, we could certainly move higher. But so far, the market hasn't had very much rally power.
Yeah, it is in the bust mode. Hour of the green market for today's close bell in downtown Chicago for this morning. Mark. Green market for today's close bell in downtown Chicago for this morning. Mark.
Well, the markets are up right now. We've got corn up 4 cents, wheat's up 11 cents. May beans are up 7 cents. So we're having a little bit of a bounce here. Again, I think it's the fundamentals remain bearish in the grain markets. But if the funds want to cover these massive short positions, it's not going to make much difference. We have seen many times that markets turn technically first, meaning that the charts bottom out, they show some buy signals long before the fundamentals change. So hopefully that's what we're seeing here with these higher markets, but they aren't acting great, and it's still very early in the day.
Now that we were going to talk about the livestock market for today.
Well, we're seeing cattle mainly just a little bit higher, 7 to 32 cents, and the fat cattle feeders are up just 15 to 50 cents. We're still trying to digest the report from Friday. The market hasn't acted, bad considering how bearish the report was, and considering that we've been on a pretty good move here in the last several weeks. The fat cattle had rallied over $20 a hundred, and the report was bearish, so you would have thought you would have seen some lower prices. But the cattle market has been staying in here. I think it's a result that the numbers are still low. You've got good demand for beef. The box beef market is back over $300, indicating good demand. So overall, the cattle market still looks good, but maybe a little toppy here. We'll have to watch it over the next day or two.
Does anyone know what is going on with the cattle expansion in these markets? Could you explain to the farmers and ranchers in rural America?
Well, the expansion, hasn't really started. When the placements are still lower, we haven't seen any real expansion. You would think with corn prices as cheap as they are relative to where they've been, you would see the guys wanting to bring more cattle into the system, but they're very low numbers, and unfortunately, the packer can't get enough beef out here. So we believe that there's still a shortage of cattle. If demand stays strong, we'll be okay. But we have to watch to make sure that the government has a budget deal by the end of the week and that they don't close down the government. If they close down the government, it's not going to be good for cattle or the grain markets.
Yes, it is really tough for the rancher.
Well, he's had, some decent years in the cattle. We did have the hard sell-off, which, brought their margins way down. But on this rally, they're back to looking okay. We just hope that the market can continue to hold off any real selling because of the report on Friday, and that the cash markets, we've seen the cash market right now around 183, 184. We've got Feb cattle going off the board on Thursday. The April cattle are up over 188. So that would put the cash market $3 to $4 under the futures. And I don't think that's going to hold.
Do you have any final thoughts on the corn market and the cattle on feed report?
Well, the corn market, we're certainly hoping that we put in a bottom here and that the funds will start covering these massive short 350,000 positions. Going into the growing season, how much more downside is there? We traded corn under $4 and we've since come back. We're a dime over that now in the March contract. So I'm hopeful that a bottom's in, but I want to see what happens on first notice day. If we can close strong by the end of the week here, I think that would be a good indication that we can see some higher prices.
Thanks for coming, Mark.
It was my pleasure. Happy to help you.
Well, folks, there is your agricultural or commodity markets analysis with Mark Gold from Top Third Ag in downtown Chicago, part of the financial division of StoneX from back roads of Illinois. I am Cesar Delgado. Have a great day. I'm Cesar Delgado from back roads of Illinois. I am joining with Mark Schlusener from the Department of Agricultural Field Office in Springfield, Illinois. Mark is a statistical analysis for the U.S. Department of Agricultural. Welcome to the show. How are you, Mark?
I'm doing really well today, Cesar. I hope you are too.
Let's start with our conversation with the Ag Census from the Department of Agricultural. Can you explain to our listeners about this topic?
Sure, I'll be glad to. I work with a part of the USDA that measures agricultural production. And we do this every year. We use surveys of farmers and ranchers to measure the number of acres of crops, the number of livestock, many other statistics about agriculture. And every 5 years, we do a census of agriculture, and that is different than a survey. For a census, we try to contact every single farm in the United States. The first census of agriculture was conducted in 1840. That is actually before the Department of Agriculture was ever invented. If you recall, Abraham Lincoln started the Department of Agriculture in, I think, 1863. But the Census of Agriculture predates that and was done in 1840 for the first time. The most recent Census of Agriculture refers to 2022. That's the reference year, and we just published results for that census. Can you repeat that question, please,
How do you
Cesar?
see impacting the age of the farmers? They are going to be retiring by 58-year-old. Could you explain about that to our listeners?
Sure thing. When we do the Census of Agriculture, we not only ask about crops and livestock, but we ask about the demographics of the people that are growing the food that we eat and the fuel that we use to put in our cars in terms of ethanol and the feed for the animals. So we ask age, gender, race questions, things like that. And in Illinois, the average age of all the farmers and ranchers in 2022 was 58.6 years, 58.6. 5 years previously, that average age was 58. So the average age is creeping up, and it's doing that in pretty much every state. Some people have a concern with that. They feel like, the age of the farmers is getting too high, and that might be a problem. I don't think it's a big problem. I know this. If you go back 50 or 100 years ago, I think farming, it was very important to have a lot of strength, a lot of stamina, because a lot of the work was done physically. But now machinery is doing a lot of our work, and so age doesn't make that much of a difference. One thing I think that's important too, farming can be an expensive business to get into. If you need access to a lot of land, whether you buy the land or rent the land, that takes a lot of money. And mostly younger people don't have that much money and probably can't get a loan to get access to that land. So it tends to be older people who've accumulated wealth over years, and they are able to get access to a lot of land. Younger people will frequently work with the older person and use sweat equity to kind of buy a share of the farm little by working hard every year. So think about this. I said that the average age of farmers went from 58 to 58.6. Well, imagine if none of the farmers retired or died and no new farmers came in. Then the average age would have gone up by 5 years. We do the census every 5 years. But the average age didn't go up by 5 years. It only went up by about 1/2 of a year. So there are younger people getting into farming, and there are also older people continuing to farm. Both statements are true.
The Department of Agriculture announced that farmlands is going to be done by the urban development. How you'd have to be measured by that.
I think there is truth to say that the U.S. is continuing a slow decline in the land in farms. For the United States, land in farms is down 2.2% since the previous census of agriculture in 2017. And for Illinois, that decline is 2.6% over 5 years. But that's, 2.6% over 5 years is not a rapid decline, but it is a decline in farmland, and that is happening across the country. So part of that is an increase in the size of cities or suburbs. There's more people in the United States, so we need more homes and apartments to house them. And then there's going to be more businesses and other things that are using, concrete instead of farmland. So it is a true statement that land and farms is declining. But also the productivity per acre is increasing. So science and technology have allowed farmers to grow more and more food on 1 acre than they used to in the past. And overall, I think we're doing very well in terms of total food production.
Do you have any final thoughts on the agricultural census from the Department of Agriculture in the state of Illinois?
Yes, I'd like to say thank you to all the farmers and ranchers that responded to the census. It's very important that your voice is heard and your farm is counted for us to paint a full and complete picture of all of agriculture in the United States. So thank you to everyone that responded, and a special thank you to the producers that responded over the internet. About 40% of our responses to the Census of Agriculture came in over the web, and that's great. That saves taxpayer dollars, and we really appreciate that.
Thanks for coming. My pleasure that you joined the show for today. Thanks. You're welcome to join the show anytime.
My pleasure, Caesar. I wish you all the best.
This is Mark Schlusener from the Department of Agricultural Field Office in Springfield, Illinois. From back roads of Illinois, I am Cesar Delgado.